channel all the way down to the volume where we can see about what volume has done. And we can see that maybe there weren't spikes of high volume, but we can see that overall volume stayed well above low and into the high region. That's going to be important information. As the market starts to move back into this area, forming a retracement, you can see that the market moved down and then retraced back into the consolidation area. What we're going to look for is, does volume stay at the same level or lower? Because remember, if there were, let's say, 10,000 orders in the original consolidation area, some of those orders wound up being net in the market, meaning not all of those orders got matched up, one with the other. So it simply is a logical deduction to say that there needs to be at least the same number of orders if the market is to move past that area, if not a greater number of orders. So, as the market moves down through the prior consolidation area and then makes the retest, and the reason why I call it a retest is you're going to get multiple tests intra-bar or intraday. For example, we're looking at a 60-minute time frame. If we went down to a 5 or 10-minute time frame, we would see many, many tests as the market pushes back into this consolidation area. But the important thing is that as the market does make this push, that we see the volume staying at the same or lower level. And we can see that indeed it does. So what this tells us is that the market is not following through. We don't have more people coming into this area to push prices up. And we know from prior videos that unless more people come buying into the market makers, or in this case the dealers, have no reason to continue marking prices up and will instead mark prices down. Now, we do know that the doji, hammer, shooting star, inverted hammer, and hanging man are reversal candlesticks. In other words, it's a single bar where we can look at it and say that there's a high probability for a reversal. When we put that together with the consolidation area and low or high volume, we now have an accurate picture not only to anticipate the reversal, but also to gauge whether the reversal is going to continue or whether the overall move is going to continue. So again, putting it in context, we're talking about strength coming into the market. Now in this case, you can see that strength does come into the market. But then you can also see that the strength is meeting with an area of resistance. So the question is there enough strength for the market to break through? By simply comparing the relative volume to the consolidation area that we see here, we can gauge whether or not this move has a possibility of continuing. Now, as the market moved down, we saw that volume was increasing. We saw that as the market started to move up, volume increased slightly again, and then the volume started to roll over. At the same time, the market started to move down. Now, we can see that on this last bar, strength, once again, is coming into the market.